Good morning, good afternoon, and good night, and welcome to the Daily Horizon View. The date today is the 17th of the 4th. As always, this is our top 5's, and we're looking at the ASX exchange traded funds. Our spotlight today is ASX, and it's MVB, which is the VanEck VanEck Australia Bank ETF. Quick overview today, all a bit negative. We had communication services and financials up, everything else flat or in the red. So the market was down 0.35% and it closed at 63.50. We had red everywhere pretty much on the things that we look at. West Texas Intermediate crude was up 1.2%. The rest were mixed or down. Top 5 percentage rises. We had CNU, CETF, Triple O, ETF, MVB. So once again, if you want to have a look at the quick rundown of MVB, I suggest you go to the end of the show today and you can go straight to that. We had China New, and that was up 2.67%, which equated to 18 cents. A reasonable volume, a bit over 56,000 shares traded. So for our top 5 percentage falls, we had IXJ, DJRE, QRE, GDX, and OZR. So IXJ is the iShares Global Healthcare ETF, and that index primarily includes biotech, healthcare, medical equipment, and pharmaceutical companies. That one's hedged, Australian dollar. We had a fall of 2.21%, which equated to $1.86 on volume of just under 19,000 traded. CETF is our first one for our top $5 rises, followed up by IHVV, then ACDC, ETF, and MVB. CETF, which is the VanEck Vectors China AMC SCI 300 ETF, which is synthetic. You may or may not know that ETF tracks the largest and most liquid stocks on the China A share market. We had 32,000 traded today, so down $1.53. Sorry, up $1.53. What am I talking about? So a few people buying into the China story. Top $5 falls, we had IBV, ETP, MPD, IJH, IXJ, and VTS. So for those who don't remember, IBV is the iShares S&P 500 ETF, which seeks results that correspond to the price and yield performance of the US large cap stocks index, which is the S&P 500. There's roughly $2.9 billion market cap for that ETF. So today we had a fall of 2.87%, $2.87, $2.87. 0.7%, if I can get my mind back to working properly, and that was on a volume of just over 15,000 shares. Top 5 number of trades. we had STW, VAS, IVV, VTS, and VGS. So for those who may not know, STW is one of the bigger ETFs traded on the Australian Stock Exchange, and that is the State Street Spider S&P ASX 200 fund, and that's designed to provide low portfolio turnover, so accurately tracking the S&P ASX 200 index, which will give you low costs. So that's one of the lower cost ETFs in the Australian market. That one has a market cap of roughly 3.6 billion. Today we had 270 trades. Price was down, so it looks like there's a few people getting out of that one. So yeah, roughly just under double of VAS. So top 5 for volume. We had USD, AAA, PM Gold, NDQ, and IOZ. So USD, for those who don't know, is the BritishShares US dollar ETF. That's a sort of medium range size ETF that has a market cap of roughly $340,000. We had some good volume, 237,000 shares traded today. So today, for a top 5 for value, we had AAA, IVV, USD, VAS, VGS. For those who may not know or have forgotten, AAA is the BritishShares Australia High Interest Cash ETF. That one generates income via holding high interest deposits in Australian banks such as ANZ, CBA and NAB. Market cap of approximately 1.3 billion. With that one today, we saw a slight increase in price, 1 cent, which is 0.02%, but we had just over $9 million traded, marginally above IVV. So it's kind of a slowish day, probably because we've got Easter coming up, so not a great deal of volume, not much happening today overall. So our spotlight today is traded on the ASX, and that is MVB, which is the VanEck Australia Banks ETF. The VanEck Australia Banks ETF invests in a diversified portfolio of ASX-listed securities, which aims to provide investment returns before all the costs that closely track the returns of the MVIS Australia Banks Index. The index is a pure play rules-based Australian sector index that combines benchmark with blue chip characteristics by tracking the performance of the largest and most liquid ASX listed companies that generate at least 50% of their revenue or assets from Australian banking. So some possible pros for investing in MVB. So by using this as part of your portfolio, you're covering pretty much the top 1/3 of the market, because the banks are such a pillar in the Australian economy. So you get focused exposure to, as mentioned, one of the largest sectors in Australia, representing a significant portion of the Australian equity market capitalisation, dividend yield potential with franking credits as well. So net asset value is 26.3 $26.31. We have closing price of $26.27, which is just below the net asset value. Management costs is 0.28%. For what this ETF includes, I think that's actually a little high. I mean, you're only looking at 7 stocks held in this ETF. You could drive those prices right down quite substantially, in my opinion anyway. So we pay semi-annually, so around December, January, and sort of July, August typically. It's a little bit confusing to pay out on this one. You're looking at a dividend around 5%. This ETF gives investors exposure to all the big 4 banks, plus the smaller regionals and Macquarie, which we'll have a look at in the next slide. I think this ETF is a solid option for investors that don't want to actually take the plunge and add an individual bank to their portfolio, so a bit worried about which bank's going to perform the best. You just buy this ETF and you get the whole basket, and then you get the average performance. However, overall, I think you're definitely going to achieve better returns by picking an individual bank. That's just my opinion, and that's kind of what I've done. So I've got investments in a couple myself. If you're looking to compare this ETF to some others in the market, which we should do before we contemplate buying anything, have a look at OZF, QFN, ILC, and SPY. The last 2 are ASX top 50 focus, not necessarily financials. So from the graph on the left there, we can see that 2018 was a down year for the ETF, losing sort of 6.5%. That's sort of way down on the overall returns, obviously, since inception. But you can see the total holdings there. So you got NAB, Westpac, CBA, ANZ, Macquarie, Bendigo and Adelaide, and also Queensland Bank. So it's pretty undiversified, I suppose. But when you're focusing on the banks, and this is one of the reasons why I think the management fee is actually a little higher than it should be. When you're only holding those 7 stocks, the management fee shouldn't be that high, in my opinion. So as always, we're not promoting that you buy anything. What we're trying to do is give more education, give you a bit of insight on what I think about these products, but we should always be doing our own research and then taking our own circumstances into consideration. So we're here to crack your financial sky, trying to get people motivated about their own finances, demystifying a few things here and there to get people motivated to do better with their own finances, be more conscious. Anyway, give us a thumbs up, give us a subscribe, leave any comments that you'd like in the comment section, obviously, and have a great day. Ciao.